Hello, my name is Steve Bigelow with the Candlestick Forum. The best stocks to buy right now are still kind of across the board, not necessarily oriented toward one sector. There are a couple sectors we look at and see they're doing well, but right now, as we can see, ever since we had the big bullish engulfing left-right combo on the Dow, the trend has been pretty consistent, meaning it's never traded back below the T-line. A very strong indication the bulls are still in control. You can see the J-hook bobble breakout in this area. You can see where they gapped right up through the 50 going to the 200. So all of this analysis is still based upon one essential indicator, the T-line. As long as you don't close below the T-line, the probabilities are extremely strong you're still in an uptrend. The Nasdaq's not quite as resilient. After the kicker signal, it's kind of waffled, backed off a little bit on Friday, but Friday didn't really count as a half-day trading, didn't show a whole lot. However, the same scenario is true. As long as the Nasdaq stays above the T-line, we have to assume the uptrend remains in progress. So a couple sectors that are acting well are shipping stocks and agriculture-related stocks. So the shipping stocks, you can see SBLK is doing a nice J-hook off the 50. If it breaks out through this level, you can be buying. And here's a few more you can be buying on strength. Same scenario in the agriculture area. They're bottoming. You can see the Morningstar signal curve breakout through the T-line. Those stocks should be doing well. But more importantly, there's a lot of stocks that are doing very observable patterns. Remember, the J-hook pattern is one of your strongest indicators of a wave 3, wave 1, wave 2, and notice where Unity bounced off the 50, stayed above the T-line. Now, if they start trading back up through this level, what can we assume? Wave 3 is now in progress. This is a much stronger analysis of a J-hook pattern because you do have the benefit of seeing that it's bouncing off the 50, which we see it as a J-hook pattern. Everybody else is looking at it as, whoops, they're supporting to the 50. Now we're confident to be buying again. FYBR is an excellent J-hook pattern using the T-line. Remember, nobody has the T-line on their charts. It works as a very effective support level, especially in combination with candlestick signals. Remember, candlestick signal is the graphic depiction of investor sentiment, and the T-line acts like a natural support and resistance level of human nature. When you combine those two, you got some very powerful reads as far as what's going on in a price move. The reason that a bobble breakout is even a stronger trend situation is because we can see the J-hook pattern. Everybody else is watching to see what it's doing at the 200. So if this opens positive on Monday, the probabilities are you're in wave 3 because everybody else is going to start piling in because they saw that it wasn't resistant at the 200 anymore. So the patterns work very effectively. As you can see on AMLX, got a nice fry pan bottom. This is the type of thing that we try to teach people on in the Candlestick Forum. Is we're not trying to make picks or show strong picks. We're trying to teach people how to identify the best price moves so that they can do it on their own or analyze situations with a higher degree of probability on their own scanning and their own analysis. So if we know this is kind of a doji sandwich, fry pan bottom, but if this opens positive on Monday, which would also be in conjunction with the markets trading positive or at least not trading off, we know we have a high probability of a fry pan bottom breakout. You add those two together. As we can see in APO, you have a fry pan bottom and what's going into a J-hook pattern. What's the prerequisite of a fry or a J-hook pattern? A strong price move. What's our expectation coming out of a fry pan bottom? A strong price move. This is a very high probability trade setup. We call it the classic pattern because usually the classic move coming out of a strong price move created by one pattern is going to be followed by the next pattern that we recognize, the J-hook pattern. So a lot of people say, well, you can show when it's time to buy. What about when it's time to sell? And that's just as simple. The process is if you see a candlestick buy, as we can see in the scoop pattern, on 9, you saw a very strong price move. And what's our trading strategy? You stay long until you see a sell signal and a close back below the T-line. Just remember that anytime you're in an uptrend, in the overbought condition, probably had a strong price move, the probabilities have gone dramatically against you if it closes below the T-line. So if you were long and you saw potentially sell signals, where do you put your safety stop? Just below the T-line. Because the probabilities are, as soon as you close below the T-line, the probabilities are pretty strong. The bears have taken control. So what we try to do as far as Candlestick Forum education is help people identify where there's a dramatic change of investor sentiment. WIT is forming a best friend signal. That's a doji followed by a gap up. And this is where we say observe the obvious. Look where they did this indecisive trading, right off the 50 and then gapped up. What can we expect? Wave 1, wave 2, now going into wave 3, based upon the correct entry or the correct opening after this trade. Same scenario. What we teach people is how to find high probability trade setups like a fry pan bottom or a J-hook pattern. And then we also teach what is the best thing to see or what's our confirmation. We want to see bullish confirmation, and we also know where we'd be closing out a trade if it closed back below the halfway point of this candle. This is not rocket science. This is just merely improving your probabilities of identifying what occurs in human nature time after time of where you should be buying based upon identifying a strong price move. That'll be it. We'll see you in the chat rooms.